So we recently got a rumor of a massive secret that Tesla is hiding behind that could potentially be a huge catalyst for Tesla stock going into the end of 2024.
This is great!
Now, talking about 2024 being bullish seems a bit odd, as I often on this channel talk about 2024, especially the first two quarters being a bit hellish for Wall Street, as we're kind of on this path to pretty much going into a recession. And I say this because when you have national debt at these record levels, and then of course you have home unaffordability at high levels as well, you have credit card debt at high levels, and then you also have auto loan delinquencies pretty much at levels that we haven't seen since the great financial crisis. I mean, things don't look pretty good for 2024, especially for Tesla, as it's a very rate sensitive company, and of course if interest rates are high, well, that's going to make it difficult for Tesla. And we still have the federal funds rate pretty much at these elevated levels, and so until they start coming downwards, well, there's something that's going to be breaking in the overall economy. And so this is why I often say 2024 is going to be very challenging, but we have something coming into the mix of this potential rumor that could pretty much change everything for the second half of 2024 in regards to Tesla. But before we go ahead and talk about the secret catalyst that could pretty much change the trajectory for Tesla going into the end of 2024, I just want to provide a friendly reminder that if you have not done so already, consider tapping that subscribe button so that you don't miss out on any future upload. And while you're at it, guys, consider tapping that like button as well, as it does indeed help out with the channel, and it does help push out the videos in the algorithm. And so with that out of the way, I want to go ahead and highlight something that is pretty interesting. So we have here Gary Black, who's a fund manager. He's also a registered investment advisor. He's also pretty big on X.com and is a pretty big Tesla bull. And he recently made a tweet that I thought I wanted to go ahead and share with you guys. Now, he goes on to say that these are the biggest Tesla upside opportunities, and how he's recently updated this post from yesterday, starting with number one, that Tesla's not resorting to cutting prices as we end the fourth quarter, and how that increases his conviction that auto gross margins have pretty much bottomed. And then going on to number two, he says that the halo effect from the huge Cybertruck interest is reminiscent of the 2020 Model Y intro, and how this should translate into increased US order flow for the Model 3, the Model Y, the Model S, and the Model X. Now, I don't know why Gary Black said it in that order when he could have just easily said the Model S, the Model 3, the Model X, and the Model Y to spell out sexy, but hey, that's of course completely irrelevant. But going on to number three, he goes on to say that the $7,500 EV tax credit will go off invoice on January 1st, and this is equivalent to a $7,500 price cut on all Model Ys, Model 3s, Model X all-wheel drives, and Cybertrucks, and how the Model 3 rear-wheel drive and the Model 3 long range will receive the equivalent of a $3,750 price cut. Now, here's the thing, these are all things that we pretty much were already aware about, and pretty much were already calculating into the price action for Tesla moving forward. But interestingly, he mentions something for number four, and he goes on to say that the 25K next-gen vehicles will likely roll out quicker than Tesla has indicated, likely late 2024, as Shanghai, Berlin, and Austin are all synchronizing production launch, and this will expand Tesla's total addressable market to the mass segments. And he goes on to say that Tesla is keeping this quiet to avoid Osborne of the Model 3. And so essentially what he's saying is that Tesla is pretty much keeping this a secret. This way it doesn't kind of stifle people from purchasing the Model 3, just waiting for this next generation model. Now, here's the thing, guys. I don't necessarily subscribe to this rumor or this idea taking place, although I do agree that this would be completely bullish. If this went on, this would be completely bullish for Tesla if it did come out in 2024. Now, we had someone on X.com respond to him pretty much asking, Gary, why do you see this actually happening? And he goes on to say that they're already hiring for the new lines, and Elon's comments seem to show more urgency. Now, again, I personally don't subscribe to this, although I do agree it's bullish, but we haven't really, or I personally haven't really heard Elon Musk kind of get more urgent about this next generation model. Yeah, it's been brought up a couple of times, but I still believe that the idea is pretty much late 2025 or going into late or early 2026. And I think the main focus is pretty much making FSD something that is actually much more progressive in terms of actually getting closer to fully autonomous vehicles. And I think that's the main objective for 2024 and kind of going into 2025. But again, I don't disagree with Gary Black that if this were to take place, this, of course, would be super bullish for Tesla. But with that said, I want us to kind of hop into my laptop. This way we could kind of take a look at Tesla from a technical perspective as well, and also highlight some catalyst events that we for sure know are taking place that could pretty much change up the whole entire price action for Tesla moving forward, as we definitely have a couple of things that we are going to want to talk about. So with that said, let's go ahead and hop into my laptop. Alrighty, so we are taking a look at Tesla, and we've been pretty much spot on, dead right on the analysis for Tesla and the overall markets. For example, back in the beginning of November, I said that it was going to be a very strong month for Tesla and the overall markets. And in fact, if we go ahead and map it out from the beginning of November all the way to the end, right? If we map it out to the peak, Tesla did almost 30%, but of course the last few days of November we did fall down, and we did around, if we kind of go to the close, around 20% for the month of November for Tesla stock. And this wasn't just Tesla stock and silo. In fact, I said the overall markets were going to push up, right? And if we take a look, it doesn't matter if you look at the Dow Jones, the S&P 500, or the NASDAQ, whatever index you want to go ahead and take a look at. But look at the Dow Jones, for example. Very strong rally, right? A huge rally for the month of November. We didn't see a month like this since like July. And so a very strong month. I said that's most likely what was going to take place for November, but I recently talked about December for Tesla, and again, we've been pretty much spot on the analysis for Tesla in December, which again, by the way, if you're not subscribed, consider subscribing so that you don't miss out on future videos. And so what did I say for December? Which, by the way, you guys are free to check out those previous videos. I'm not someone who flip-flops around, says one thing one day and then changes my mind the next day. Of course, you know, I try not to stay dogmatic, right? It's not good to be dogmatic, but I stand my ground. I really take pride in the research and analysis I do. And so one of the things I said for December was that December was going to be a very choppy month, but nonetheless, I believe that December is going to ultimately close higher. And so if we go from the beginning of December 1st all the way to, you know, where we're currently at with December, we are indeed a little bit higher, but by a minuscule amount. It's not by a lot, right? And we did have a lot of choppiness, a lot of sideways range. In fact, you could kind of see it better when you go to like a 1 hour time frame. Pretty much up, you know, down, and pretty much just moving sideways in regards to Tesla. And I talked about this being you know, I covered it from multiple angles, right? I talked about it, how historically December is just one of those months where we do tend to see the markets close about 1% higher. But again, I always kind of put that disclaimer out there that you don't want to, you know, base your trades off of historical price action, right? Because historical price action isn't indicative of future performance, but it is something interesting to you know, kind of take note of, right? And obviously, another thing I pointed out in a previous video is that when you have a strong month like we did in November, we tend to see the month after not perform as well, although it is typically around that 1% to 2% range going upwards as well. And so we have history on our side, although that doesn't have too much weighting. But we had a lot of the job data that caused a lot of noise for the markets, and so that was expected. But we also have some catalysts that I want us to go ahead and cover going forward. Now, this is where I expect the bullish, you know, price action to go ahead and start taking place in regards to Tesla. And so right over here, we see that Tuesday, we have the consumer price index and the core CPI year over year, CPI year over year. These are, you know, essentially just a report that are inflationary gauges, and I expect that it's most likely going to come in consensus with what Wall Street is already expecting. And even if it deviates a little bit, I don't think that a minuscule deviation from expectations is going to cause much of a problem. And I believe that if it does come in line with expectations or just slightly deviates, it's going to be seen as something very bullish for the overall markets. And so that's, you know, a positive catalyst that we're getting on Tuesday. But then or possible positive catalyst. Because again, I don't know, but I'm expecting it to be right. Now, Wednesday is another interesting day because, of course, we get something that a lot of people don't talk about. That's the producer price index, the PPI, right? We get the core PPI. Everyone loves talking about the consumer price index, but rarely does anyone really focus on the PPI. That's essentially kind of like a leading indicator for inflation because it's the prices that producers pay, and we tend to see producers pass on the prices to consumers, and so that's something that we want to be mindful of. But more importantly, after the PPI report at 2 p.m., we get the FOMC interest rate decision, where we get the Federal Reserve making an update on monetary policy. Now, my prediction, again, and if we've pretty much called it, not even pretty much, that's an understatement, for the entirety of 2023, every single rate decision meeting that we had for the FOMC, we got it exactly correct, even to the basis points, right? Which is insane. Now, I'm not trying to give myself a pat on the back, but what I'm saying is that my prediction for the next meeting is that we're probably going to have the FOMC pause, as we're seeing a lot of the data kind of align with what the Feds want. We're seeing the labor markets slowing down. Just last week, we talked about the job openings and how job openings are contracting, and that's exactly what Fed Chairman Jerome Powell wants. And so that pause is still bad for the overall economy because obviously interest rates, or the federal funds rate, still being elevated. It's still painful. A lot of people have this idea that, oh, well, rates are not getting higher or they're not getting raised, so it's not so bad. Well, no, right? Because it's still being high, it's still not a good thing, okay? I want us to kind of understand that. And so I believe that we're going to have a pause. That's possibly going to be that extension of a bullish kind of price action after the positive CPI report. And then, of course, on afterwards, we always get Jerome Powell kind of have his speech or his conference, and I believe this meeting we also get a summary of economic projections, right? We don't get that in every single meeting, and so that's something that we also want to be mindful of. A lot of individuals tend to not really talk about the summary of economic projections, but it's definitely something we want to be mindful of. Now, real quick, let me just double check if that is something that we are getting. I don't want to kind of say something that's incorrect, so I just want to verify it in just one moment. Alrighty, so I'm on the federalreserve.gov website, and we do indeed see that on December 12th, we have this little asterisk over here. And so again, that asterisk means that these are meetings associated with the summary of economic projections. Again, I just wanted to correct myself because it doesn't happen every single meeting. In fact, you see, we had it in June, didn't have it in July, had it in September, didn't have it in October or November, but we do indeed have it in December. And again, this is something that we want to pay attention to because this is where we get that dot plot, right, where we see where the different members of the FOMC are kind of projecting where pretty much the federal funds rate is going to be, and that's going to be something interesting. So this is a big one, right? We often say that whenever we get a summary of economic projections, that tends to have a more amplified movement on price action. And so this is all stuff that we want to take into consideration in regards to the overall markets, and of course Tesla stock is, this is a company that we talk about a lot. And I am someone who I consider myself a macro investor and trader. I don't just look at the charts, right? I definitely do look at technical analysis. I don't discredit it. But of course, I put much more weighting on the macroeconomic environment and the catalysts that take place. And so with that said, we just kind of talked about what's coming up, but I want us to kind of now switch away from the macro side and kind of now switch into the technical side. Now, you just heard me say that I do look at technical analysis, but I don't put too much weighting on it. But in regards to Tesla, it is a bit different, right? And I know that's saying, well, this time is different or this one is different. Well, the reason why Tesla, I put a little bit more emphasis on the technical analysis is because one thing we have to understand is that in regards to Tesla, this is a stock that's primarily held by retail traders and investors. And retail traders and investors, the reality is that they often only look at technical analysis. They only look at the charts. And the reason being is technical analysis is pretty much one of the easiest forms of analysis to do, right? You're just drawing squiggly lines on a chart, and that's why I don't put too much emphasis on it. But it ends up being a self-fulfilling prophecy when you have a lot of retail traders pretty much looking at a stock and only looking at technical analysis. Now, of course, there are retail traders who do a deeper look. And in fact, I'm a retail trader, but we often talk about fundamental analysis, looking at the balance sheet, etc., right? Looking at the core fundamentals of the business, and then of course looking at the macros. But again, like I said, it's a self-fulfilling prophecy with Tesla when you have a bunch of retail traders that hold it, right? It's not held by institutional investors as other companies like Apple and Microsoft. And so we see that Tesla has been getting rejected by this descending trend line quite often. I mean, I believe it's about 4 or 5 times where we get close and we get rejected. So we're pushing upwards. The expectation is for December to get close to this area, but I don't necessarily believe it to be an area where we're going to actually break out of it, right? I do believe that we're probably going to get close and get rejected again. And if we take a look on the right, we have a lot of volume relative to price. And if you guys are familiar with the channel, I almost sound like a broken record where I say when there's a lot of volume relative to price, well, essentially that means that there's a lot of exchange between the buyers and the sellers, and that causes areas of resistances, supports, or consolidation. And so as Tesla moves upward, well, we get met with this area where there's a lot of volume relative to that price, and so we're probably going to get rejected at that area. Just as you see, when there's little volume relative to price in this volume pocket, that's where we tend to have those bigger candles, right? And of course, when you move across on the chart, the volume relative to price is going to change because now it's accounting different price action. I always get that question of, well, why is it moving when you move the screen? Well, it's because, we're not looking at the other prices. Now, when you factor them in, of course, it's going to start moving. And so that's something that we want to be mindful of. We have a huge self of volume relative to price. And this kind of aligns with the expectations with going into 2024. We're probably going to get closer. 2024, I expect us to kind of get rejected. And that's when the real hardship takes place. That's when the previous rate hikes that we've had in the past start to really make its way down the pipeline. That's when we actually feel that. And I know I get comments on these videos sometimes, well, Justin, don't you think the economy is already feeling the rate hikes? We're only feeling some of them. I want individuals who challenge that, I want you to go on Google and type in, how long does it take for the economy to feel the impacts on changes in monetary policy? I know it's a long search on Google, but if you go ahead and type that in, the answer you're going to get is about 1 to 15 months, right? And so we still have about like 4 different rate hikes that we still haven't felt. And so there's truly going to be pain that's going to be coming in 2024. And that's going to be very challenging for Tesla. Now, we had earlier in this video, I shared with you guys Gary Black saying that the second half is going to be pretty bullish if we have that catalyst of the $25,000 next-gen vehicles kind of getting started. And now I kind of don't agree that that's going to happen. I agree that it's going to be bullish if it does, but I don't think that's going to happen. Sometimes I feel like Gary Black is one of those analysts that kind of, or I guess fund manager, sorry, he's not an analyst, but one of those fund managers that kind of just pulls things out of nowhere sometimes. But that's just my opinion. Of course, I want to just put a quick disclaimer. You should never copy what anyone does or says. You always want to do your due diligence. You don't want to go into a trade just because I think it's a promising trade. You only want to trade or invest in whatever you see value in. And so with that said, I do mention that I am a long-term investor for Tesla. And so I think for those long-term investors, 2024 is going to be an awesome, especially the first 2 quarters are going to be awesome to kind of scoop up some more shares, especially if you're bullish on Tesla in the long run, which I am. The data is showing that EV is, these sales are still trending upwards. And of course, there's a lot more that I'm still bullish for Tesla on. And so if you're a long-term investor, the point is I think we're going to have a lot of great opportunities. But again, don't take my word for it. Only do whatever you see value in. Now, of course, if you're trading Tesla, you're going to have we still have some room to kind of run up before we get rejected for December, which is kind of in line with the expectations, although I don't expect it to be a big run up. And then, of course, 2024, if you do, if you are trading in a separate account, then there may be some opportunities to sell calls if you're into that, or perhaps just shorting the underlying shares. I mean, there's several different ways to go ahead and play the markets. You could go ahead and do credit spreads, but then now we're kind of going into the intricacies of options trading and all that. And so I don't want to kind of go over anyone's head with this, but definitely a very exciting and interesting time. I know it's kind of odd to say exciting when you think the recession is probably around the corner, but exciting because I am a long-term bull for Tesla and I'm excited to scoop up some more shares. But with that said, guys, hopefully you enjoyed this video. I'm going to go ahead and end it here. But before you guys go, consider checking out this next video right over here where I kind of talk more about the bears in 2024 for Tesla. With that said, I'll see you guys on that next video and take care.